Chapter 2, developing efficient financial hubs. So what is a private bank actually for these days, Paul Kearney?
So we have to have at our heart what it is we're seeking to achieve. The model that's persisted for the last half century is an agency model. Clients and families have given us their money as agents and said, you look after it for us. And I often tell my colleagues that the last major industry that relied on an agency model was the travel industry, where when we grew up everyone had a travel agent in their high street. That industry has been eviscerated by technology. We can now all have access to flight timetables, hotel pricing, transparency of knowledge. That is on the cusp of happening in our universe, and we have to work out how we attack it.
Really, it's about knowing the marketplace that you're going for. There is still, at a certain level of wealth, a profile of person that will definitely want to continue to seek face-to-face advice and value that face-to-face relationship. How that translates to the next generation is yet to be seen. I think they will want less of it, but I think they will want some of it. It will be needed to be combined with cutting-edge technology to survive, but I think a house needs to offer both.
I think that holds true for a lot of the younger generation. They do not want to interact on relatively simple questions where they need to assess options and make a choice, validate maybe their hypothesis. However, when it comes to impact investing, or as Ian has said before, leaving a legacy, and you're entering that kind of discussion, that is a discussion that in a digital-only channel you will very likely struggle to have and to create confidence.
I think we will have different breeds of clients wanting different experiences, client experiences. Those that would prefer the digital route, but they remain connected to the person, and those that really want the face-to-face interaction, because they value that face-to-face interaction and seek it. And I think we see this in the wealth management space in particular. And I think wealth managers today are focusing on the number of clients to portfolio managers' relationships, the ratio of that. Because if you have too many relationships, then clearly your time is spread across a significant number of clients, and clients start realizing that. And clients can move very, very quickly, So we're seeing this evolution, and if banks and institutions that don't adapt, they will be killed by the new entrants, for sure.
I think one thing that we are seeing with technology becoming more relevant and clients becoming more demanding and professional, they have different needs, and our relationship managers need to adapt. They need to embrace technology, and they have a different role to play. If you're having very demanding clients and you have a very broad offering to play with, the relationship manager becomes more of a conductor of an orchestra instead of a one-man band as we've seen it very often in the past. And that is something that obviously requires a different profile that is not that easy to find. And so a competition for talent is definitely something I think all of us have to deal with.
Alex Fray at Boston Multifamily Office, you chose to base your operation in the Isle of Man. Is that due to the fact that your clients were there, or is it because there are tax reasons or cost reasons for you to be based in that jurisdiction?
The genesis of Boston Multifamily Office was actually being a single family office. So the founding family, the Moore family, were living in the Isle of Man, and they decided to set up a single family office for reasons of cost, quality of service, bespoke level of service that they felt that they could do more effectively themselves. So it was a couple of years after that Boston was formed that the family decided that actually what they were doing was sufficiently differentiated from what was being provided to the rest of the market, that there was a reason to roll out those services to other families. So as time goes on, we all look at our business and try and look over the horizon and see what's coming next and how we should adapt. And that was behind the decision to open an office in Malta. Something I think that the MFSA and FinanceMalta have done very, very well is to be innovative and adaptive whilst remaining rigorous in rolling out a framework that is attractive to private wealth businesses and other sectors as well. and then attracting practitioners there to actually base themselves there.
How are your potential clients reacting to this recent assassination of a leading journalist? Are they concerned now about the island's reputation?
There is anger and there is grief. I have to say, well, not an excuse, but it does happen everywhere. So, but it should not be. It should be condemned, and the government should take steps as to what has been going on. Yes, there are concerns. We're happy to talk to people and address these concerns. We are not on any OECD or EU blacklist. Nobody has forced us, not even the EU or any government, to say, listen, change your tax system. This was all agreed with the EU in 2007 under state aid and code of conduct. So I don't understand why it's being called a tax haven.